Gord Glenn. I'm the CEO of Minnova Corp. It's a TSXV listed junior gold mine development company, symbol MCI. We're developing and restarting the past producing PL gold mine in northern Manitoba. That's a past producer from the late 80s. Significant infrastructure still on site in good condition, significant or main permits in place. At higher gold prices, the project continues to look very attractive. We've completed a feasibility study back in 2017 with positive results, but at current gold prices, the project looks even better, and we've got a new development plan to restart the mine as an open pit development initially and then go underground.
Good to see you. It's been a while. 2021, I think it was. Right, different times, different markets, much higher gold price. You're saying this makes your project viable. That's what you're telling me?
Yeah, it was viable before as an underground from a feasibility, like a full feasibility study point of view. It was viable back in 2017, 2018. We just couldn't get it financed. The markets weren't all that interested in gold unless you were a much larger resource base and a much higher production profile. The feasibility study from 2017 was based on an 800 ton per day run-of-mine operation, producing on average 46,000 ounces of gold per year for about a 5-year reserve life. We have about 10 years of resources. Again, this is from a resource that was calculated, estimated, mineral resource estimate, based on a gold price of $1,250 per ounce. Obviously, at higher gold prices, we are looking to update our existing out-of-date mineral resource estimate and bring it current with at the higher gold price. So like our peer group, we would expect to see an increase in overall resource ounces, and that'll contribute to a better production development decision. And then in addition to that, at higher gold prices, we have an opportunity to look at different mine development options, and one of those is by open pit.
Okay, so we're going with the idea that this is a near-term gold producer. To do that, what do we need to do? Because 2017, 2018 feasibility study, that's obviously out of date. How do you go through the process of updating that?
Well, the first thing is, engage with a new engineering group. So we engaged with A&B Global Mining out of South Africa. They've got considerable experience on both open pit and underground, but also with underground shallow dipping narrow vein development projects. What we tasked them with for PL was, let's take a look at the underground development, but at higher gold prices, let's take a very hard look and develop a preliminary plan for a open pit development from the start of mining operations. And at a full capacity, we have a 1,000 ton per day mill. In our past feasibility study and PEAs, we only considered underground development at 600 tons per day, and open pit was really a supplemental contributor to the mill throughput to a maximum of 200 tons per day. So we're really only mining run of mine 800 tons per day. With the open pit development strategy that we're currently working on and quite advanced on, we're looking at 1,000 tons per day, which is in fact the nameplate capacity of the mill. So new concept, new development plan focused on open pit development from day one at full nameplate capacity, run of mine 1,000 tons per day.
Right, and give me a sense of what is exactly you're going to be mining, because you're 5-year life of mine and bigger reserves, etc. I think the feasibility study talks about an underground resource number. How do we get to understand what the open pit potential is?
Yeah, so if you look back at our past Crux interviews from January of 21 and June of 2021, we highlighted the geology and of the mineralized structures. The mineralized structures do come to surface. They project up through a lineament swampy area effectively. So they can be, so they come to surface, so they are open pittable. Post 2017 feasibility study, we identified something called the PL North trend or target area, which is effectively an extension of the main PL deposit. Which has not included any of the resource. And we've been drilling it for on and off for about 5 years, up until 2021. We've demonstrated that it's a good mineralized continuous zone over a couple of hundred meters, both along strike and down dip. In fact, the last hole that we drilled in 2021 was one of the best step-out holes in the history of the project, where we drilled literally in the shadow of the mill, in our case, and hit 101 grams over half a meter at 208 meters vertical, which is a typical high-grade narrow vein intercept at PL. So we have structures that come to surface, and at the higher gold price, we can basically afford to have a higher strip ratio and mine efficiently and economically from surface for probably more than 5 years as it stands right now. So some of our concept study work that we've been doing, and again, we got significant data from the original operations of the mine in terms of drill hole database, and then obviously our investment to date on the project, which is really only $20 million. We got significant data for the engineering group to assess and develop preliminary open pit mine design, floating a cone, and then taking that to an engineered pit, and then basically identifying strip ratios, throughput rates, equipment selection. We're really all the way through that process right now. So we highlighted that in a recent press release from just a week ago, I guess, late October, where we highlighted that the work that is done to date has gone exceptionally well and fast. So we're going to update the feasibility study in 2 ways. We're going to do a preliminary economic assessment and an updated mineral resource estimate. That'll be a phase 1 to get new economics at current prices, new resource estimate at gold price of $2,500 into the market. We're targeting Q1 for that. And then we will move right into the feasibility study and complete that and focus again. That'll be 100% startup as an open pit mine. We'll conclude that in Q3 of next year. And by then, I would hope that we'd be in a position to finance and restart the mine. So from a timeline, and how do we go from development stage to operations, we're really talking about 12 months of engineering design work, PEA, feasibility study, and then mine finance and development to be in production late 2027 or early 2028.
Okay, so a lot of work being done with engineers on the new PEA and then updated PFS by Q3 and end of next year. Let's kind of just skip to the mill bit if we can for now, and we'll come back to the PL Gold Mine more broadly in a second. What exactly is the current position with the mill? Nothing's happened since we last spoke. You needed to do a fair bit of work on that. So how are you getting after that? Yeah.
So again, nothing's happened. It's been locked down and still remains in good condition, just like it did in 2021. Again, you've been through the mill virtually in one of our last Crux interviews. The mill is it's in exceptionally good condition. Everything was shut down well. It's electrified in part for our purposes now. We have an AECOM condition assessment report that highlighted the refurbishment requirements required to get the mill up and running. Again, nothing major. It's more electrification of the mill, new electrical wiring, some upgraded process components, some upgraded equipment, but nothing major. That number was $10 million as part of the feasibility study. Of course, time and inflation since then, it's probably in the order of $15 to $20 million today. We're actually going to have over the course of late fall, early winter, we will have an electrical contractor up here to basically look at the mill refurbishment requirements today, give us an estimate on that. They're also looking at refurbishing the power line, which we own, and re-energizing it so we can bring power directly to the site as part of the development strategy. So the mill is I'd say it's well in hand, and the work that we're engaging on right now will give us the updated numbers for the PEA and ultimately the feasibility study update.
Right. Okay. So engineers commissioned. You're going to need some money between now and the end of next year. You're going to need to obviously be talking to the markets about their appetite to spend 15-20 million bucks on the mill upgrades and other kind of G&A costs. What's the mood out there at the moment? High gold price for sure. Explorers probably haven't seen the money cascading down there. You're in a slightly different position. This looks like advanced development from a standing start.
Yeah, well, I'd say the interest is high overall in the gold sector. It maybe come off a little bit given the retreat in gold price over the last week or two from touching $4,500 to a little bit under $4,000 gold, but it's still an exceptionally high gold price. Which again, from our point of view, anything north of $2,500 is unbelievable. $2,500, which would be the consensus price we would use in our base case modeling as of today, is still very attractive gold price. So there's good interest. We actually, for the first time, we did a small financing in the summer of 2025, where we brought in our first institutional shareholder out of Australia, which I'm not surprised. The Australians tend to have a greater appetite for development stories like PL than some of the Canadian institutional investors. Again, not concerned about the size and the scale of the deposit, more interested in timeline to production, relatively short, existing infrastructure, existing permits. These are all criteria that they would gauge the project on. We brought in new European and U.S.-based investors, which we hadn't seen nibbling in our stock or market for years, quite frankly. So the high gold price drives investor interest, and I think it'll be supportive of our path to production. Our path to production is PEA. It's drilling to add more detail for open pit development plans. The PEA, then feasibility study, and again at these prices, the project looks very, very good, both economically and technically.
Well, yeah, I think I'm looking at a presentation of yours from April. I hope we're updating that soon. About 300% after-tax IRR on the previous feasibility study at $2,500 gold. So we shall see what the new numbers look like. But it kind of gives a good indication of where this thing could be heading. Just let's talk about the big idea here. Like, and I've seen a few companies do the same thing. They say, right, we've got a resource. It's small, but it can grow. But the point is, the market's rewarding those who can show revenue generation. You've got the mill. It's small capex required for the upgrade, or OPEX if you want to define it as that. We're going to get revenue generation to actually then cover our G&A and then get after the exploration. There's still exploration upside in this project, is there?
Lots. We've demonstrated it over and over again, and as part of the drilling program that we're working on right now, where we continue to drill outside of the existing resource, where we announced again as part of the press release from late October, we did announce that we have been intersecting targeted mineralized structures at targeted depths with, in some cases, visible gold on those in those intercepts, and again, all of that is outside of the resource as it currently stands. We've also been drilling infill holes within the resource with the objective of upgrading the category of mineralization from inferred to indicated, and then indicated to measured. So we're upgrading the resource, we're expanding the resource. That'll all go into the updated technical studies, the NI 43-101 studies, And that will ultimately support attracting, the institutional investors and the financial sponsors debt to the project to get it up and running on a fairly timely basis. Again, we're 12 months from a feasibility study, and then from our previous feasibility study, we had a timeline for development of 12 to 15 months. I think that'll be the same today, maybe even a little quicker, because we're doing open pit. We're not going underground. So open pit development is usually a little bit less constrained. We can open up sections of the proposed open pit that are going to be higher grade, like starter pit. So it should be an attractive, relatively near-term producer, which has already demonstrated from our previous feasibility study, as you highlighted, had a very high IRR. That's a function of low capex or low relative capex, because we've got mill, we have infrastructure, we have access, we've got access to low-cost Manitoba renewable power. So all these things contribute, plus high gold price, to, I think, an exceptionally high leverage to gold price restart project, which is what PL is now.
And what about recoveries?
We're actually going to do we haven't updated the metallurgical process flow sheet during my tenure here, mainly because there was a good feasibility study back in the 1980s, and we already have 1 year of mill operating results, which highlighted up to 90% recoveries. And that was back in the 80s, when they didn't have some of the, call it the modern process technologies or equipment that we have today. We're actually, as part of this drill program, we will drill some metallurgical holes specifically designed to recover a volume of core, specifically for updated metallurgical test work. That test work would include basic process flow sheet work, plus more modern ore sorting technologies. We'll look at that. It's being implemented at a number of our peer group companies that have similar mineralization. And then we'll also look at new modern gravity recovery technologies, like Falcon concentrators, the type of centrifugal gold recovery techniques that are efficient at recovering fine-grained gold. And we've got visible gold, we've got nuggety gold, we've got fine gold. So all of these modern technologies will be incorporated into an updated process flow sheet.
Okay, we'll get into it when we speak to you next. We're having conversations a lot recently, it seems, on alternative financing. I say explorers have not had access to capital for some time, and if they have, it's been expensive. That said, we've seen some quite unusual entrants into the market, people like Tether coming in and trying to grab physical gold where they can. We've seen lenders on project financing so stepping up again, equipment providers stepping up again, with the gold price doing what it's doing, that there's a bit more margin. Have you started conversations? How are you looking to finance all of the? I know you say it's readily available in the marketplace, but you could have an idea of who's going to be attracted to something like this.
There's some new players in the space. There's some usual players in the space. I think everybody's that we've spoken to so far is very interested in the de-risking of the project by going open pit at a higher throughput rate. Again, it'll probably still be in the 40 to 50,000 ounces per annum, but it should be it's a lower risk because of the open pit. They like the margin, right? Open pit is typically lower operating cost, less risk, and shorter timeline to production than a comparable underground operation. And again, there's lots of examples in our peer group where projects go underground, and the constraints of being underground, the difference between plan versus actual in stope tons and grade and recovery present challenges that cause delays and increase costs. From an open pit point of view, we're going to be a little less constrained and be able to identify and mitigate those kind of relative challenges. So what we found from the groups that we've been talking to, who are obviously very experienced in looking at projects and assessing their I'll say their relative robustness. What they see with our revised open pit development plan is a very robust project that can handle the debt and pay back quickly. Like and part of the strategy for our financing is sort of based off that PEA. That PEA that we're doing will be a very robust project. Again, we've got a feasibility study on the project already. We already have open pit reserves from the past feasibility study. We're enhancing all that as part of a two-step process, PEA first. That PEA will bring in project finance discussions. It'll bring in contractors for planning for the open pit, so we get good solid quotes. It'll bring in all those components, and we can basically have a feasibility study that should be very robust, and I would say fulsome from the point of view of having had the contractors and the project finance groups in the tent from a very early stage, right? So they can see how we are advancing the project and be part of the feasibility study essentially, and be confident in the development plan.
Right, and what's the timeline that you're working to on this? All things being equal and everything being done on time, when would you look for the mill to be up and operational?
Well, the mill, obviously the $20 million that we're kind of estimating preliminary, this is a preliminary number, internal number, that'll be in large part funded out of the overall project finance package. There are certain things that we can do in advance of the feasibility study with respect to refurbishing the mill they're independent of the throughput rate, like electrification, updating some of the basic components of the mill to modern equipment, I guess. Some of that can be done like starting right now. So when we're talking about financing, I'm talking about financing in the context of call it 3 different buckets. One bucket is drilling and exploration, which would go into the mineral resource update. One bucket is the costs associated with the feasibility study, the PEA, and then the other bucket would be site infrastructure upgrades that can be done now. So I briefly mentioned we own the power line. It's connected to the substation. It has been damaged in the past and more recently by wildfires that occurred in the summer of 2025 here in Manitoba. Nothing major. We lost a couple of poles in the fires. Those can be replaced fairly easily, but we can basically re-energize and refurbish the power line and re-energize and refurbish parts of the mill well in advance of the feasibility study and the main project financing. So again, this project can be accelerated on relatively low capital cost or costs, just because of the nature of the existing infrastructure and the location of the project.
Okay, and just exhausting all the kind of revenue opportunities you've talked, I think, in the press about open pit bulk sampling. What's the trade-off study for that look like in terms of does it slow things down or is it not? Is it an option really?
I don't think we need to do it, to be honest with you. The bulk sample is really for metallurgical process test work. It requires a lot of work and preparation to do that versus taking drill core from PQ, very large diameter core. That's much more efficient. It's much quicker. And we can do that this winter. That's the plan, actually. We'll do that metallurgical bulk sample test work. We don't need hundreds of tons. Again, we already have 14 months of mill production data, which has very detailed information and data on the ore handling. Again, it's dated from a technology point of view, but from a process engineer point of view, they can still utilize that and the original metallurgical test work from the 80s, and then update that with modern stuff again, with some new technology and new process flow sheet components in there. So we'll get through that very quickly. We'll have very good results from that. I'm quite confident of that. Again, relative to past performance, where again, one of the reasons the mine closed back in the 80s was the grade that was going into the mill was well below the plan. The feasibility study from 1987 called for a 7.2 mill head grade, like a diluted run-of-mine grade of 7 grams. They were delivering to the mill something half that, 3.5 grams per ton. So the mill's designed for a certain grade of ore throughput, and they're getting half of that. So the recoveries were a little bit depressed relative to what they should be for this type of deposit. It's non-refractory, very, very typical of lode gold deposits. Mineralogy is very consistent with, again, many projects that achieve 95% recoveries. And I would expect that we'll be approaching that with updated metallurgy.
Okay, so the next news I'm going to hear from you is going to be about what?
Next news will be drilling results. So we started drilling at the beginning of September. I'm sure we're filling the lab right now. I know we are, because we're shipping samples out regularly. So there'll be drill results. I hope to give an update on the progress of the preliminary pit design work that we're doing. Again, it's all part of the PEA planned for Q1 of next year, so we can talk about some of the overall tonnages that we envision. Again, these will all be preliminary in nature, but I think we can highlight to investors, to Crux investor video viewers, how an open pit development right beside existing infrastructure is attractive in relative to our peer group. Our peer group of companies, they're developing open pits that are maybe 100 kilometers away from a mill, or they have to toll mill. Our mill is right beside us. It's 200 meters, 300 meters from the open pit. So it's a pretty attractive development project, and significantly de-risked from the previous feasibility study.
Okay, well, Gord, I appreciate you coming on and giving us this update. I would just urge that you update your marketing material so people can read all the good news and access it readily, especially the news releases. So it looks like the business model hasn't changed much. It's just that the market's doing you a lot of favors right now. Take advantage of it, sir.
Well, we got to just get the word out. Again, it's early days in the revised mine development plan. We've been quiet for quite a few years, just market conditions. We've got a new plan, higher gold price, good plan, and a lot of marketing ahead of us. So thank you very much, Matt, for getting us on, doing an update, and we look forward to updating you and the rest of the market in the coming weeks and months.